It's obvious that when the economy starts to weaken, companies will begin to lay people off. But why is this the case? If you look at what's going on a deeper level, you start to realize it's crystal clear. The first thing I'm going to talk about is the job cuts that have taken place right now within the tech industry and what that really signals. The second thing is that the job situation, it's getting weird. What am I talking about here? Well, it isn't so one-sided. There's a lot happening, and I'm going to bring that to you today in this video. You don't want to miss it. I'll explain everything. Let's begin. This is one example of what we've been seeing, that Salesforce is cutting 10% of its personnel, more than 7,000 employees. This happens to be just one. You can see what he said, that I've been thinking a lot about how we came to this moment. As our revenue accelerated through 2020, we hired too many people leading into this economic downturn that we are now facing, and I take responsibility for that. They all have to say this message. Now, what happened here? They grew massively, Salesforce, all these other tech companies, and then as soon as things started to slow down, they had to go in the opposite direction. Amazon is another one in that case. Jim Cramer says more tech layoffs are coming after Salesforce cuts 10% of its headcount. Of course, this is what occurs. But is it because of Salesforce? Is it because of Amazon? Or is it really part of the economic cycle? If we are only to focus on what happens with one company, we are never going to see what's happening broadly. And that should not be the case. But if you're, in the general financial analysts and investor world, that's what they do. They focus on the company. Big, big mistake. If we zoom out and look at what the Money GPS has to say, I promise you, you're going to realize this is all part of, grand master plan, if you want to call it that. Amazon says it will cut over 18,000 jobs. That's more than initially planned. So, by the way, I wanted to note, this company has something to the effect of 1.5 million employees. They're huge. They're a massive company. And so they hired from 2020. There was this huge jump when everybody else was firing. Amazon was hiring. And now they're cutting back 18,000 jobs, maybe even more, by the end of the year, who knows. But it just shows us that when we go during these times, things start to get tight, the demand starts to wane, companies will lay people off. I think it's pretty obvious. And you see that historically, we're seeing it today. Tech layoffs are happening faster than at any time during 2020. Areas that were largely spared in 2020 are now among those with the largest numbers of job cuts. And that just goes to show you, you cannot have this facade forever. I have talked about this over and over again, and I was laughed at, and people thought I was a joke, and people left and they went to all these other YouTubers out there and they told them what they wanted to hear. And that's the end of that. But I've been here talking about the cycle, saying you're going to see it at some point. And people said, I can't wait around. And here we are today. I told you this. I told you this as part of the cycle. It's the same thing every time. I'll say it in every video. And this is why I believe it's so integral to simply pay attention to the data, stop talking about the politics, stop talking about what happens with Bezos and him going on a yacht and all these different things, and stop looking at what happens with the nonsense, the absolute nonsense that they're trying to show you out there. It is not valid. It's not valid. If we simply pay attention to monetary history, there's people that say words, I don't even know what these words mean. I'm losing, all these words that are being used today because I only look at the historical texts. That's all. That's all I want to know, and I'm able to see exactly what happens. I hope you're on the same page with me, but if not, simply hit subscribe and I'll show you everything that you need to know. Okay, this is not for me to know all these things. I show you so that you can be empowered and we can learn together. Well, if you want to look at this, they basically just explain the fact that seeing how the demand has been waning, and this is creating a problem for companies that are doing a lot of advertising. So you got to know Meta, formerly known as Facebook, as well as basically all the tech companies. They are really just advertising platforms. And so we see a lot of these companies that, the advertisers are just not there anymore, or not as much. So this is having an impact on their revenue, and that causes a problem for these companies, and it just gives more, incentive for investors to look elsewhere because you got to protect your portfolio. So what do? Well, some of these are saying, well, I'm going to get into something that's a little bit safer, something that will hold value stocks versus growth stocks. That's what's attractive today. Remember that I said this. If you take something from this video, that people are going towards more value stocks versus growth stocks. Layoffs, website layoffs.fyi. I'm just showing you that since 2022, it's actually all of 2022 plus the first few days, they probably have to update their site, over 153,000 jobs in the tech companies. Pretty incredible to see it right now at this time. There are many factors that can affect a company's decision to lay off employees, and interest rates are just one of them. That being said, there are a few ways that rising interest rates could potentially impact the economy. One possibility is that as interest rates rise, it becomes more expensive for businesses to borrow money. This could lead to some companies to cut costs, potentially by laying employees off or reducing their hours. This could have a negative impact on the employment and economic growth. As demand for goods and services increases, this can lead to higher inflation. In response to higher inflation, the central bank may decide to raise interest rates in order to keep inflation in check. If this is the case, the economy may continue to grow despite the rising interest rates. The higher they go, the more burden they put on the borrower. It's important to note that there are many other factors that can affect the economy and employment, and the relationship between interest rates and employment is certainly complex. But we got to realize it's so important right now today that if we simply ignore it, we're going to be left in the dust. We're going to be watching and waiting. When's this thing going to happen? And meanwhile, it's right in the middle of what we're dealing with. But this is when the job situation gets real weird. I'm going to show you several things, okay? Watch how unusual, like it's so out of balance. This is one thing. Job openings hold strong despite rate hikes, manufacturing in contraction. Then we have this. Workers return to restaurant jobs. Small business find hiring relief. Okay, look at all this stuff. 1/3 of the world economy expected to be in recession in 2023, according to the IMF. You saw that. So we're just wild, okay? Workers still quitting at high rates and getting a big bump in pay. Okay, nothing's making sense so far. Recent layoffs have also inordinately affected higher income workers. Many of the tech companies that have made headlines with layoff announcements pay extremely well. So they're showing you that the median worker at Facebook and Meta, or Facebook parent Meta, and they give another example here with Twitter, this is 232,000 and 295,000. So you're seeing that there's all these wild things. Restaurant workers, they're getting jobs. Maybe those are the ones that are getting laid off from Meta and Twitter. I don't know. All kinds of weird things are going on with jobs. But what do people ultimately do? Well, the truth is that, as they say in this article, they vote with their feet. They're talking about Florida specifically. With warm weather and no state income tax, Florida has been an attractive destination as of late. In fact, the Sunshine State is so attractive that it just reached a historical milestone. Florida's population grew by 1.9%, 22.2 million people in a single year, the fastest growing state in the nation. So it just shows you what people are doing as a result. The jobs are going to one place, or not just one place, but they're moving out of areas, out of certain industries, and they're moving to different places, different industries. Now that's always in flux, but that's what's occurring today. I hope you see that. I broke that down in this case. And you can look at corporations spending likely to continue in 2023 amid recession fears. This is according to CFOs. 40% of CFOs say that their company's headcount will also remain the same next year. 40% said they expect it to increase. Do you see? It's so strange. It's so strange. I've never seen anything like this before, where there's so much disparity among one simple thing. We're looking at jobs. It should be pretty obvious what's happening, but it's not. That's not the case here today. Now, we take it through the cycle and we watch as different companies, different sectors are affected differently by this. That's real key to understand, okay? I'm going to show you some indications just looking at the PMI when you could see what happens with manufacturing. Obviously, that is an indication of other things when you add it on: imports, exports, what's happening at the ports in general. Looking at all of that, you can look, in addition to this, we can see the US manufacturing PMI, the ISM PMI, the blue and green line, both of these headed into contraction territory. Anything below 50 is a contraction, and we've been, many months in a row on a downward spiral. You see that for yourself. And this is showing us both manufacturing and services PMI declining. So these pieces of data are really, really important when they make it into contraction. What does that do? What does that signal? A recession. That's right. So last time we saw this, of course, was during 2020 when things were hit real hard. But what did those companies, those countries do? You might have been aware. Well, of course, they printed a heck of a lot of money. They stimulated, and perhaps we'll see that again in short order. Well, that's it. If you found it informative, hit that subscribe down below. Hit that subscribe, and I'll bring another good video tomorrow. Take care.